We'll be diving into the key themes driving market sentiment, including geopolitical tensions, equity sell-offs, bond market movements, and currency fluctuations. The prevailing sentiment in the final session of the week remained firmly risk-off, signaling investor caution. This risk aversion was largely driven by the intensified conflict in the Middle East. Crucially, there is little prospect of a near-term resolution to the conflict, keeping investors on edge. Now, let's turn our attention to the performance of global equity markets. Major global equity markets experienced a, quote, sea of red, with widespread selling pressure. In the United States, key indices have now logged their fourth straight week of losses, indicating sustained negative momentum. The sell-off was not limited to the U.S., with equities also being sold off across Europe and Asia. The global bond market also saw significant action, as the sell-off intensified. Bond yields jumped higher in both the U.S. and Europe, reflecting the intense selling pressure. Specifically, 10-year yields rose 11 basis points in the U.S. and 13 basis points in the U.K. Local yields on futures also moved higher, with 10-year yields rising to almost 5.2%, the highest level recorded since 2011. Markets are now pricing in a terminal RBA cash rate of 4.85%, which suggests the Reserve Bank of Australia could hike rates another 3 times. Finally, let's look at the notable movements in the currency market. The US dollar was bid amid the prevalent risk aversion, with the USD index rising 0.4% to 99.65. In contrast, the Australian dollar underperformed, falling around 1% to 0.7023. These losses for the Aussie were broad-based across its crosses, reflecting generalized weakness. That wraps up our market recap for March 23, 2026. Thank you for tuning in.